Hey guys, we are doing another ETF review, and this one is a little bit cleaner than the last. It is clean, CLNE. That's a bit of a newer ETF. So let's get to the app. So we're here at the ETFtracker page. We go back to full screen. We were looking at IVV last time. So it was the S&P 500 one from iShares, and we can see here we just had to scroll down. We don't necessarily have to type. It depends on where it is in the list. Now this one's interesting because it doesn't have as long a history. Okay, so it's only got the 6 months worth of data there, and that's going to grow over time. I remember one of my favorite ETFs, ATEC, only had a few months of data at a point in time last year. Came out when the coronavirus crisis was just starting to manifest in March. And so it came out in March and didn't have much data. So we can see here some interesting kind of details. It hasn't really returned that much. It's only 1.8%, 1.75, 1.8% cumulatively. But in the last month, it had a 5.1% gain. And so just need to give it a little bit more time if you think this one is interesting. It tracks the S&P Global Clean Energy Index. And so because, and this is really interesting, right? When an ETF doesn't have as much of a history, but if it's a passive ETF, i.e. it passively tracks an index, typically you'll see that index has a little bit more data than just what the ASX in this case has provided. So as an ETF, it only has a little bit of information there. So not too much. It's only 6 months worth. But because it tracks the S&P Global Clean Energy Index, you can look at that and see further details about it. So let's take a look at net inflows. The most was in March this year, and that was at 24 million, and it's kind of gone down a little bit. The latest month was just above 10. Total FUM is 80.4, so 6 months to nearly get to 100. That's pretty good. So if we expand on that, we can see over here how FUM has grown. So even though net inflows are slowing, there is still positive net inflows. It's net. So if we saw a light blue line here, that's going to be negative. That's going to be outflows, but there's still money pouring in. And so we see that the funds under management has grown to 80 million. Okay, so next month we'll probably see an update and see where that is. It could be close to 90. We'll see. All right, so we go back. That is all about size. And the next one is all about transactions. And we have the main chart here being the number of trades. But if we expand, we can also see two other charts. One is transaction volume. The other one is transaction value. Now, all of these sub-level details have a bit of a description about what we're talking about when we look at transactions, and why transactions in this case are interesting, because it is a sign of popularity of that ETF to go along with size of the ETF. So it's settling into around just over 1,000 trades a month. It did start off strong, and most of the time ETFs do. I mean, we saw SEMI, which is another ETF that came out this year, and that's from ETF Securities, that had a really big month when it first came out. Okay, so let's go back. Okie dokie, we are looking at tradability. So the main chart here is the bid-ask spread, and that is the spread between the buyers and the sellers. So how far away are they from each other? Usually sellers want to sell it for more, buyers want to pay less. That's a gap. Whenever that gap is crossed, that's when transactions occur. So tradability, we're looking how easy the ETF is traded. If the spread is low and it's got good liquidity behind it, then that means that it's very likely for an ETF to get traded. You are going to be having a little bit more risk, okay, if you have an ETF that's the opposite. It's got low liquidity, okay, and its spread is really high. What we can see here is that liquidity in the way that it is measured came out quite high when it first came out as an ETF, and that lowered down and is settling into the high teens. So we'll see more data of this over time, and its spread is quite low at 0.36, 0.25%. It may get lower there. I think the industry average is about 0.21%. Okay, so let's go back. Now, the last two parts are on distribution yield and management expenses. So it's 0.65 in terms of its management expense. the industry average is 0.52. Now, that's not split by active or passive. That's just across all the 240 ETFs that are out there. It has a very low distribution yield at the moment, but this is not necessarily a ETF that has, I guess, distribution type qualities to it, although it might see that change when it actually gets to distribute its dividends going forward. So it might have already done part of that, since usually these things are quarterly, but it was quite low. Okay, so those are not high numbers there, but maybe you're not buying this ETF for those factors. And then finally, we've got, I should have mentioned this at the start, we've got the description here. We can see what it tracks: diversified portfolio of 30 of the largest and most liquid companies involved in clean energy production. Okay, let's take a look at those holdings. And we can see the details here as per the holdings data. So you see that number on the main page, you click on the arrow and it takes you over to here, and we can click back. So there's a German company, Verbund, EDP, I'm not going to pronounce that name, I think that is French. First Solar Inc., there is Zingy, Solar Holdings, Solar Edge Technologies, and we can see all of the different percentages here. So there's only 31 of these, so it's a bit smaller than some other more diverse ETFs, but the total the total of the top 10 makes up 48% of this ETF, which is kind of in line with where the industry average is. And so that is that bit of data. And you can click on the fund website to see more information. You can go to Google Finance and see how this compares. It's typically measured against EARTH, ERTH, which is the BetaShares version of that. Now, if we click on the 6 months, they don't go back much further than that. I'll see. Okay, so going back 1 year. Okay, there's a bit more data there. Curious as to why we've only got 6 months of data there for CLNE as an ETF, but we'll check that out. But anyways, you can compare on Google Finance, but make sure you're trying to compare like for like. So there's other ESG ETFs out there, but what they hold is very different when you look at the holdings of those versus EARTH and CLNE. And, you know, CLNE is the one in focus right now. So that is it. That is CLNE. Hopefully you found this very interesting. And yeah, if you're interested in more of these kinds of reviews, I think this probably took a little bit longer than I thought it would, but I try to keep this short, sharp, and sweet. We might go into deep dives a little bit further later on. But yeah, please do like, share, and subscribe. I'm Mark. This is ETF Tracker, and I'll see you soon.